The Grand Lux Company has 2 jobs in work in process at the beginning of January, job 1 and job 2. In work in process, you've got jobs, and in those jobs you have direct materials, direct labor, and overhead. During January, 3 additional jobs were started, jobs 3, 4, and 5. During the month, jobs 1, 2, and 3 were completed, and jobs 1 and 2 were sold. There were no finished goods inventory at the beginning of the month. The following transactions took place during the month. We have A to E, and then required 1 says prepare a job costing sheet for each job and indicate what jobs are in which account: work in process, finished goods, and cost of goods sold. What dollar value balance is in raw materials, work in process, finished goods, and cost of goods sold at January 31. Job cost sheet. We have jobs in opening work in process. So in our job cost sheet, collecting costs for the current month, we're probably going to have our beginning or our opening work in process. And then for the current month, we're going to add direct materials, direct labor, manufacturing overhead. And so we have these very intense names for our jobs: job 1, 2, 3, 4, and 5. And then we can add a total column. Always, 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 always try to remember, if they have a beginning work in process, do not forget that line. That is one line that most students forget when they're doing a job. They'll just do the current month's transactions and they'll forget about the beginning WIP or the opening work in process. And they told you in this question, 19,000 was an opening WIP or beginning WIP for job 1, and 13,500 was in beginning WIP, work in process, for job 2. They said during January, 3 additional jobs were started. So if these jobs were started during the month, they would not have any opening work in process. And these are all dollars. During January, 3 additional jobs are done, blah, blah, blah. So what we want to do is now collect our costs for January for all of our jobs. Because this required says prepare a job costing sheet for each job, and then we need to indicate which jobs are still in work in process, which jobs are finished goods, which jobs are cost of goods sold, and then what dollar value balance is in raw materials, work in process, finished goods, and cost of goods sold at January 31. So we've put our opening balances from December 31st, what they had, January 1st opening. Now let's go through and figure out the rest. The following transactions took place during the month. A, direct materials used and direct labor hours incurred in January by each job were as follows. Oh, so direct materials used by each job is just right here. So we can put that in our direct materials line. Just copy the numbers down. So job 1, and I've just shortened direct materials. Direct materials used for job 1, $1,200. Direct materials used for job 2, $2,250. Job 3, $4,600. Job 4, $5,700. Job 5, $1,200. And these are all dollar values. So therefore the total, and they give us that, the total direct materials used in the month, $14,950. So coming out of raw materials and being used directly on a job or direct materials. You could also have coming out of raw materials and going to indirect materials, but those wouldn't be picked up here. That would be picked up in manufacturing overhead actual. Okay, also said, and direct labor hours incurred. Okay, so these are the hours. So there were 306 direct labor hours used in total, and they've told us how much per job. So you kind of just have to skip down a little bit, and it says in part C, the direct labor rate is $30 per hour. Okay, well, you just have to multiply then. So 20 times 30 is going to be 600. 35 times 30, 86 times 30, 140 times 30, 25 times 30. Multiply those out, and that'll go down to your job cost sheet. So now we need to take them down to our job cost sheet, but that's all you're doing is multiplying it by the direct labor per hour rate. Thank you. And you can total it up as well, 9,180, which should also be 306 times 30. You don't have to put the dollars here. I just like to make sure that I'm reminding myself this should be direct labor dollars, not direct labor hours. So, mathematical exercise so far. Manufacturing overhead. The company applies overhead on the basis of direct labor hours. Applies overhead, direct labor hours is the driver. So our predetermined overhead rate is going to be our estimated or budgeted manufacturing overhead dollars divided by our estimated driver. And they've said in this case, our driver is direct labor hours. At the beginning of the year, it was estimated that total overhead costs for the year would be $75,000. And that total direct labor hours incurred would be 3,000. So that means that they determined that their predetermined overhead rate is going to be 75,000 divided by 3,000, $25 per direct labor hour. Which means every time a job incurs a direct labor hour, we are going to charge $25 of overhead to each job. Okay, again, predetermined overhead rate is based on estimated. Once you come up with your predetermined overhead rate, you then apply it based on the actual of whatever your driver is. So going back here, we are now going to do $25 for every direct labor hour to apply our overhead. So we get $500 for job 1, $875 for job 2, $2,150 for job 3, $3,500 for job 4, and $625 for job 5. And again, you can once again take your 25, multiply it by the full number of hours here, and you should get a total of $7,650 of manufacturing overhead applied to your jobs. So I'm going to carry those numbers down now to my job cost sheet. So those are the costs that my jobs have had applied to them or they incurred during the month of January. So I can total them up, 21,300, 17,675, 9,330, 13,400. And again, all these jobs are different, so you would expect their total cost to be different. Could also be different the number of units they're producing or whatever it is they're doing. But this is in essence our job cost sheet for each of our jobs. Doesn't mean the job's done yet. Could still be sitting in work in process. That we still have to determine. But we've done a job cost sheet. It does want us to now indicate what jobs are in which account, work in process, finished goods, or cost of goods sold. Okay, I just want to quickly look at what else they had here. We dealt with C, we dealt with that. Raw materials inventory at the beginning of January was 5,000. Purchases of raw materials during January amounted to 16,300. Okay, that's raw materials. We'll deal with that. That's actual costs for overhead to a certain extent. And then the following overhead costs were incurred during the month. Oh, that's overhead. That's actual overhead. That doesn't have anything to do with applying things to the job. This company must be using normal costing because they're using actual direct materials, actual direct labor, and then they apply overhead based on estimated amounts, which was a predetermined overhead. So we'll deal with this in a few minutes. All right, so we've done a job costing sheet for each job. We've come up with a cost for each job so far. So let's see where they are. At the top here it says, during January, 3 additional jobs were started. Great, we've accounted for 3, 4, and 5. During the month, jobs 1, 2, and 3 were completed. Okay, jobs 1, 2, and 3 were completed, which means if they're completed, they come out of work in process and they go to finished goods, correct? So these are your job cost sheets. This was all the jobs you were working on, so the amounts were sitting in work in process. But they've just said, during the month, jobs 1, 2, and 3 were completed. So those move from work in process to finished goods. They also said, jobs 1 and 2 were sold. Oh, so these aren't actually sitting in finished goods anymore. These 2 are sitting in cost of goods sold, or have gone to cost of goods sold because they've been sold. Which means these 2 jobs, 4 and 5, must still be in work in process because they didn't move to finished goods because they weren't finished and they weren't sold. So therefore, jobs 1 and 2 were in cost of goods sold. Job 3 was in finished goods. Job 4 and 5 are in work in process. So the question said, prepare a job costing sheet for each job. Indicate what jobs are in which account, work in process, finished goods, and cost of goods sold. What is the dollar value balance in raw materials, work in process, finished goods, and cost of goods sold at January 31? Well, you can't just take your job cost sheet, just so you know. Because this was just work in process for the prior months in January and things sitting in work in process. What's in those other accounts can be a little bit different. So I'm going to do this the traditional accountant way and use some T accounts. You don't have to do the T accounts. I'll show you how to do it a different way. And what I want to do is just flow through everything we just did. So we had work in process. We have raw materials, and I'm just going to short forward that to RM. I know I'm going to have my MOH applied. And again, I run 2 accounts. You could just call it MOH and just deal with the one, which means I'm going to have MOH actual as well. I know I'm also going to have cost of goods sold because I know some move there. And I know I'm going to have finished goods because I know some move there as well. So minimally, that's where I'm going to start. The question did say up here at the bottom, at the beginning of January, we had 2 jobs in work in process. We put those into our job cost sheet. We added them up. So opening work in process in our T account, $32,500. So opening work in process, $32,500. And I'm just going to put OP for opening balance. There we go. Other opening balances, they did say in Part D, raw materials inventory at the beginning of January was $5,000. Oh, okay. Raw materials inventory, beginning of January. So raw materials, $5,000, opening balance as well. It did say also, up at the top, there was no finished goods inventory at the beginning of the month. They also haven't given us cost of goods sold at the beginning of the month, so we're only going to deal with January for that. So MOH applied, MOH actual, we're not going to worry about that. Cost of goods sold, we're not going to worry about that. And if you want, you could put that there's a 0 in the opening balance of finished goods. Because you could have a balance in finished goods that at the prior month you had finished the job, but you just hadn't sold it yet. So there could be an opening balance in there because things could sit in finished goods. All right, what did we say happened? Direct material used, $14,950, because that's what we put up here in our table. $14,950 we used of direct materials. So that came out of raw materials and went to work in process. Direct labor went into work in process, $9,180. Debit work in process, credit. Guess you'd be paying them under the table and just do cash. $9,180, so that's direct labor. You can call cash wages payable. I'm going to call this wages payable, cash. Somewhere there that $9,180 came from. We don't really care about that T account, but overhead, $7,650 went into work in process for overhead, and that would have come from MOH applied. So $7,650 because I use the two accounts for overhead. So that's A, B, C, D. D again, raw materials inventory at the beginning was $5,000. We took care of that. Purchases of raw materials during January amounted to $16,300. So purchases of raw materials, $16,300. Maybe we paid cash, maybe it went to accounts payable, something like that. Doesn't really affect our job costing. But that would have gone into raw materials and affected inventory, which we don't usually care about, but the question did say what dollar value balance is in raw materials. So we got to work out raw materials. And you're not going to get raw materials off your work in process because raw materials go into work in process and overhead goes into work in process. Oh, let's do the movement of our stuff. So 21.3 was in work in process. We finished it, so it went to finished goods. We then sold it, so it went to cost of goods sold. You can do all that movement or just take it out of work in process and put it to cost of goods sold, whichever you would prefer. So we're going to take 21.3 out of work in process. This is job 1, and I'm going to put it directly to cost of goods sold. Again, you could put it through finished goods first. You could do it here, 21.3 and then 21.3. Same thing with job 2. Job 2 came out of work in process, 17,675. Put it all the way over, 17,675, 17,675. Just don't put the wrong number. And that went to cost of goods sold. Job 3 just went to finished goods. So don't move it out of finished goods. All right, we counted for the movement. Then we just have actual overhead here. The following overhead costs were incurred during the month. Indirect materials used. What's the journal entry for indirect materials used? Debit work in process, credit raw materials. Correct? Indirect materials used came out of raw materials and went to work in process. No, it's not debit work in process. Debit what? Come out of raw materials, indirect materials used. These are overhead costs, therefore went to MOH actual. Indirect labor, debit MOH actual, credit wages payable, or something. Utilities. credit AP, debit MOH actual. Because they're saying these are overhead costs, so you don't have to guess if they are on the income statement or the balance sheet. They're saying, nope, these are overhead costs that need to go to MOH actual. Depreciation, debit MOH actual, credit accumulated depreciation. And other, I don't know, credit AP, another AP one for set 500. So if you total that up, the amount that goes to MOH actual is $5,750. But do keep in mind that raw materials has been affected by $350 here. Which means when you're asked what's the balance in raw materials, you need to take that $350 into account, that it's coming out of raw materials and going to MOH. So $350 came out, and I'm just going to call this overhead into MOH actual. Because again, I run two accounts, $5,750 overhead, wages payable or AP or whatever. I've got $1,600. I'm going to put $1,200 for the utilities here as well, because that could be like AP. I'm going to put the other here. And then I've got accumulated depreciation. Not that these matter, because it didn't ask for these other accounts. $2,100. I think that accounts for everything. Okay, so raw materials was one of the questions we were asked. What is in raw materials? $5,000, $14,950, $63,350. So $6,000 is in raw materials. Balance in work in process. Okay, well, you could go up here, and because you've accounted for everything in work in process, these two are your ending balance in work in process. So work in process, you could say $13,400 plus $2,575. So that equals $15,975. I'm just answering the question for what it wants. Alternatively, you can add up your T account. It should equal it as well. So this should equal $15,975. It also want to know what's in finished goods inventory. Finished goods, well, that's the one job up here. $9,330. Again, it should also equal what you have in your T account. So these cross off each other, so just $9,330 is in finished goods. And cost of goods sold. Again, you can add up your cost of goods sold. The two jobs are the ones that went to cost of goods sold. So $38,975. Or again, you can add up your two jobs here. The $21,300 and the $17,675, which are both in cost of goods sold. So some of it you can pull directly from your job sheet as long as you don't have an opening balance in finished goods or cost of goods sold, and you can work out what the balances are. So I have answered the question which said prepare a job costing sheet for each job, indicate what jobs are in which account, which I did by noting it here at the bottom. What dollar value balance is in raw materials, work in process, finished goods, and cost of goods sold at January 31. They didn't give us opening balance for much, okay? There was no opening balance in finished goods, so we didn't have to take that into account. Required 2. Close manufacturing overhead to cost of goods sold. What is the adjusted cost of goods sold at January 31? Okay, so last class I also mentioned if they tell you to close at the cost of goods sold, then you close at the cost of goods sold. If they don't tell you to do it, don't do it. So here they're specifically telling you to close it in required 2. Close overhead. So I have 2 overhead accounts. I have my MOH applied and my MOH actual. You could have it just in one, that's fine. Doesn't matter, either way works. So I want to close those accounts. We've got applied overhead. Didn't ask you for this, but that's okay. Applied overhead, $7,650. You can find that just from looking at your job cost sheet. You don't have to look at a T account. Actual overhead, they subtotaled it even, $5,750. So again, you didn't have to do a T account to get these amounts. Are we over or under applied? We applied $7,650. We actually incurred $5,750. The difference is $1,900. Is it over or under applied? Over applied. So it didn't ask this, but in some questions you will be asked this. So we have over applied by $1,900. So if I was to do a journal entry, it didn't say you have to do a journal entry. It just said close it and what is the adjusted cost of goods sold. So I'm going to credit manufacturing overhead $50,750. I am going to debit overhead applied $7,650, which means I need to credit cost of goods sold for $1,900. Which means my adjusted cost of goods sold is $37,075. So I credited my actual, debited my applied. The difference of 19 needs to go on the credit side. So therefore my cost of goods sold is decreased to $37,075. So adjusted cost of goods sold is the $38,975 minus $1,900 equals $37,075.